All right, y'all, we are live, and this is an interesting topic because we are discussing what the luxury home market is doing in Phoenix, Arizona. Now, not just a luxury home market, but we're also discussing what beats inflation currently in today's overall economy. If you live anywhere in America, I guess, or anywhere in the world, and you want to invest in something that's going to beat the rate of inflation, well, there's no doubt that real assets will do that. Okay, real assets will do that. Owning real estate will do that. We're gonna get into that and more today, and also going over where rates currently stand and what that means for everyone else that's looking to maybe buy or sell a house here in the Phoenix, Arizona area, guys. So this is the best 20 minutes you're gonna spend every single week when it comes to knowing your move in real estate for the local Phoenix area. Guys, I'm Kelly Cook with Everything Phoenix, our YouTube channel. We absolutely love pointing out and giving our insight, data, and opinion, of course, on where the housing market is going and what you can do to be fully prepared. So we're going to spend the next 15, 20 minutes, like I said, and diving deep on that and development news across the Phoenix area. And I think, again, guys, don't misunderstand the fact that I do believe there's a window of time. Okay, window of time that I think we all have here to buy a house and dictate our terms a little more comfortably because we're still in a buyer's market in most places across the Phoenix area, and get into that property hopefully before things change. Now, will it change for the worse or for the better? And that's the debate. That's the comments below. I'm going to hear from all of y'all. So if you think it's going to get worse, comment below. Or just go ahead and comment right now. You're live. Let's go, baby. Let's get the debate going. Or do you think it's going to get better? And how bad? Because you go on YouTube, places like this search engine, right, called YouTube, and the people out there talking about market crashing is everywhere. Why? Well, because that's going to give you the most clicks. That's the best click bait. It's going to give you the most money when it comes to YouTube paying for ads as well. Okay, but is it the truth or is it the way someone lines their pockets? Now, I can't fault anyone for trying to make a living, but just give us the data. And the sky is not always falling, just like the sky is not always bright and sunny. So what is the forecast today and for the next, I don't know, say 3 months or so until the end of 2025? And do you make a move or should you hold tight? We're going to discuss that all and more. So buckle up. Here we go. I'm going to share my screen and we are going to dive right into this here because we're going to talk about the Cromford report, because we have to start there, guys. We start with data. As you know, the show, it's not my opinion, very little of it. We're talking data first. And so Cromford report says the market index is at 79.3. What in the world does that mean? Well, that means that we are officially and still in a buyer's market, guys. You see it right here. The balanced market is between 98 and 110, and we are not in a balanced market. But if you look at the supply index, specifically, we are in a balanced market almost right on the dot, right? Where the demand index, we are in a buyer's market as well because it is low and demand has consistently stayed low. Now, do we think demand will get better? Now, typically the season of awesomeness, right? You guys know, if you watch my videos, you know, pure awesomeness is right around the corner. And pure awesomeness means that the weather is cooling down and people will start flocking to the Phoenix area between now and the mid to end of April. Okay. So this could be the time where real estate actually has more demand. And if we have more demand and supply stays around the same, well, prices should hold steady, if not maybe go up a little bit more. But have they already gone up? They already have. They already have. We're going to dive in and I'm going to show you what I'm talking about right now. So again, the Cromford report talks about this. And if you look at the October 14th daily observation right here, you can see that it talks about the housing market and the overall dollar volume of the marketplace. And here's what it says. Scottsdale is now larger than Phoenix, guys. There it is when it comes to dollar volume. The housing market is because of the price points. This has never happened before. Although fewer than half as many homes have sold in Scottsdale, they're more than twice as expensive on average, and the total dollar volume is $6.3 billion. The same for Phoenix is $5.8 billion. This is crazy, right? This means Scottsdale's home market is now 8% bigger than Phoenix as measured by MLS closings, okay? This has never happened before. In fact, it wasn't even close in the past. Now, PV, which is also the most expensive real estate in all of Phoenix, is actually right there as well, but it doesn't have anywhere close to the actual closing transaction count. It's at $1.3 billion, but it's fifth right behind Chandler and Mesa and Gilbert, and of course, Scottsdale and Phoenix. Okay. So that is interesting, guys. What do you think about that? What do you think about that? Scottsdale is, I mean, it's a beast. It's growing, right? You have more and more houses being built because there is still some places where that is happening. You have condo and townhome developments going vertical, and these are not cheap developments, right? So here we go. It is not necessarily really to point out that luxury home buyers are different from typical home buyers who make up the vast bulk of our market. These luxury buyers tend to focus their sights exclusively on Scottsdale and PV, and then with a sidelong glance at Fountain Hills, Carefree, and Cave Creek, plus honorable mentions, Arcadia and the Biltmore areas in Phoenix, okay? There are luxury homes elsewhere, but out-of-state buyers really find them because they don't really look outside of the Northeast Valley. This is true. So, guys, you know the deal. If we go here and we just type in map of Phoenix, okay? Let's do this real time. You're going to see what I'm talking about here. We're going to pull this map up, and you're going to see that when people talk about luxury homes, they don't look elsewhere, even though there are high price point homes in other parts of the valley. Now, they do a little bit, let's be clear, but the majority of them do not. You're talking the Northeast Valley, which is this section up here of Scottsdale, even down here in Old Town Scottsdale a little bit, right? But Central Scottsdale, North Scottsdale, all the way up in here, Fountain Hills, there's a token look, and then up here, Cave Creek and Carefree up in that area. Now, if I do the satellite view, you can see that what's interesting is the mountainous range, right? Here's McDowell Mountains going right through here, and Fountain Hills sits on the opposite side of the McDowell Mountains, giving you a very beautiful scenic area. And then, of course, you have Scottsdale over here that run up and down, and then Cave Creek to the north. And then down here, you have the Biltmore area and Arcadia area right here, sandwiched between the Central Phoenix area and the South Scottsdale area. So that is the area that the Cromford report is talking about when it comes to luxury home and where they primarily are found. I have a ton of videos on this on my YouTube channel with all these places, including the areas of Arcadia and Biltmore, as well as the entire areas and towns of Fountain Hills, Cave Creek, etc. Okay. Now, here's what's interesting. All right. This brings to mind parallels with the stock market. This is what's happening, guys. Here we go. Companies with any connection to AI have strongly outperformed, think of the S&P 500 especially, the rest of the market in valuation, far beyond any normal metric of profitability. For example, NVIDIA now has a market capitalization that far exceeds the annual gross domestic product of the country of Japan. Think about that for a second. That's wild. So we're very wary of making predictions, but for those involved, please consider that in statistics, reversion to the mean is definitely a thing. Okay, now we talk about dollar volume, then we talk about October 11th here, and there's more about the volume of the marketplace happening and where currently stands in the millions. It is crazy. Now the change is up monthly 8.5%, and it's up annually 7.6%. So that means price points are going up. Doesn't necessarily mean there's more demand. There can be equal demand while bigger dollar volumes occur because price points are increasing. So either way, the housing market overall in Phoenix, in a market that's kind of like or last 2 or 3 years, doing pretty good. Okay, doing pretty good. This paints a positive picture. Here's what the Cromford says right here. They're basically echoing my statement. It paints a positive picture for overall for the housing market. Okay, and then to get in the really weeds on some of the numbers, so we're not going to go crazy here, but what does this all mean? Both of these are good news. Okay, dollar volume, annual and monthly change. Here we go. Despite the weaker than normal demand and most buyers having a distinct edge in negotiations, the overall market has managed to grow, and average prices have almost managed to beat inflation, if only by a tiny margin. For this, we have to acknowledge the outsized contribution of the luxury home market and people that are continuing to obviously spend money on high dollar ticket numbers. So, for example, for homes priced at $2 million or more, dollar volume has increased 17.1%. Hello, luxury home market. The market below $2 million only managed 6.1%, but it still increased 6.1%. That's still a sizable number where a lot of markets across America now are not in the positive at all. Okay. Agents who specialize in the top end of the market should be feeling pretty happy about the statistic. The majority of agents who focus on the remainder of the market, which is 97.4% of the rest of the units sold, the vast majority of the housing market, still made good progress with a 4.2% increase in homes closed and a 1.8% increase in their average price. The only bad news is that the home prices rose less than the consumer price index, i.e. inflation. So non-luxury homes get more affordable. Guys, do you understand what they're saying right there? Oh my goodness, what just happened? Let's go back to this article. Here we go. There it is. Current U.S. inflation rates. Here's where it is right now for the 12 months ending in August, 2.9%. There it is. Okay. That's where the CPI index is currently. So inflation is currently at 2.9%. Now, the whole concept here with owning real assets, as I mentioned early in the show, is that it is your best hedge against inflation. So inflation, guys, obviously takes away your dollars values that are sitting in maybe your bank account or under your mattress or maybe in a backyard hole somewhere, right? Hopefully don't do that. But if you do, your dollars will lose purchasing power over time. It's currency. That's just what happens. Look back anywhere in any country, going back in hundreds of years of history in any country. Okay. So how do you fight against that? Well, owning real assets or businesses that maybe operate really well and turn profit, right? Because they don't necessarily need a specific currency because there's always going to be an exchange of value between two parties of some type. Right now, it's currency. Okay. It's US dollars and it's the world's currency at the current time. Okay. However, if you want to combat against the high inflation rates that we saw in 2021, right, of 7% or 6.5% in 2022 and so on and so forth, you can do that by owning real assets because as you own real assets, when inflation goes up, what happens to the value of your real asset? It goes up too. So your net worth goes up. It's your hedge against that. And when you have a 30-year fixed mortgage or a 15-year or any fixed payment type, your payment stays fixed and your asset goes up. You want to go rent somewhere, prices go up. Prices on everything goes up, but your payment stays fixed on your housing cost if you have a fixed rate mortgage for X amount of time. It's a beautiful thing, okay, when it comes to your housing part. So I would love to hear what anyone has to say with comments about that. You agree, disagree? What are your thoughts? Please let me know. I would love to hear and get that conversation started because I know all of you, I don't agree, but that's okay. That's the benefit of being on a platform like this and having disagreements and talking them through so we all can learn because Lord knows I don't know it all, but I am here to bring you some information about what this looks like. So going back to what the Cromford report says is there's your inflation rate, but they also say that the housing market is actually beating the price of inflation, except for the market that is below $2 million. It went up 1.8%. And the inflation is currently at 2.9%. But does that beat being a negative or in a a depreciating market? Yeah, it could be worse. It could be negative 1.8%. So at least we're up in terms of value of your asset, that is your home that you own. So hopefully that all makes sense, guys, that we are beating it big time in the luxury home market. So yes, are the rich getting richer, so to speak? That's what's happening right now. Let's call a spade a spade. That's what's happening right now. So when you have high inflation, it just separates the middle class from the poor to the rich. That's just what happens. So inflation coming down is good for everybody for the most part, right? And navigating between the two are important parts. So guys, when I say that I would do everything in my power to get in the game of homeownership, this is what I mean, because you may have to sacrifice and live in a neighborhood you don't want to live in for a short period of time to get into the game, because that will help you start building equity. Over time, you have to let time incubate. That's the downside here, because everyone wants to do things really quick and be in the microwave economy. But over time, let it incubate. And then, when things go up in value, you hopefully can sell, take that equity, and then trade it into an area of town or a price point you would rather be in at that time. But time does take time. I know, it's genius, but it's true. I know we don't want to hear it. But okay, back to some more stuff here. Where else do we have going on in the marketplace? Well, there's the dollar volume right here, year to date. So you can see right now that we are in 2025. We are at 26.9 billion. The numbers don't really matter. The point is, look at the graph. Okay, in 2020, 21, look at that. 22, overinflated housing market, values came down. The dollar volume of the marketplace came down with it, which is kind of a reset. Okay, it's starting to increase a little bit again. So if you bought a house at the end of 2022, beginning of 2023. That was a good time, even though rates were higher, okay, overall, because you hopefully caught the down of the depreciating market of the end of 2022, okay? Now, if you go up here to sales per month, this is interesting because we have dollar volume, but we have sales. How many sales are happening in the Phoenix area? Well, month to month, you can see that in October, we're not through the whole month yet. So we already have beat October 24. And look at October 23 and 22, guys, not good when it comes to units selling, homes selling, people buying and selling, right? Closings occurring. So 22 and 20 and 21 were really good. I'm sorry, 21, 20 were really good. Obviously, we know that. But we are now down to the area of around 2016 when it comes to the month of October. That's interesting. Now, if we go to the next one, this is also interesting too. This goes by quarters. And you can see that obviously the third and fourth quarter are typically the lowest when it comes to the amount of transactions or closings happening in the Phoenix area. But 2025 is already better than 24. It's already better than 24. So the question, guys, look at those numbers. Has the bottom already bottomed out? I'm telling you right now, maybe not, but there's a good chance it already has. Just look at these graphs I'm showing you guys. It's already starting to be better than what it was month by month and year by year, quarter by quarter than 2024 and 23. Does that mean it bottomed out 23? Not necessarily, but right now, guys, there's some momentum in the marketplace, the overall economy of the U.S. Now, obviously, I was talking to somebody today. Have you guys heard about this? The average cycle, this gentleman I spoke to is awesome, by the way, and I had a chance to speak with him, and he's very, very intelligent. Now, he studies economics and studies Warren Buffett tremendously, and what he talked about was the average economic cycle that includes the housing market is not just 7 years, but total of 18.6 years going back of all the cycles of the economic cycle from tip to tip. So we are in that, getting close to that number, right? We're getting very close to that number, being fact that, in 2000 and, 8, we kind of 2007, we started it, right? 2006, 7, we kind of started it, right? And here we are today. So what he went on to say is that you typically have this thing called when you're at the very top of the market, you have a thing called the winner's curse. Okay. The winner's curse is when the market really runs for about 2 to 3 years longer after it's already been pretty good than it probably should. And it usually comes after a little bit of a dip. Well, there was a dip in 2024 in the overall economic cycle in the S&P 500. If you look at that, they talk about the stock market. Okay. So I'm talking fast here. I know you got things to do, places to go, but listen, there's a possibility he's wrong, I'm wrong, we're all wrong, but that we already started in 2025 the quote unquote winner's curse, which could last, on average, historically 2 to 3 years, to where things could go up even better than they are today. And then, of course, some sort of recession happens in the overall economy. Now, a lot of people are thinking that recession is going to happen now because home prices are too high and a lot of things happening in the economy. But if you also look deep in the global economy and how the U.S. economy is tied to it, possibly is there another run happening? And I know a lot of people do believe there's a run still to happen, even though things have gone up for quite some time. So is it possible that there's another couple years of a run, whether it be the stock market, housing market, etc., and then potentially there is a recession, or maybe the recession happens in 2026? I don't think that's going to happen. It could, but I don't think either way it's going to be driven by housing this go around, especially not in the Phoenix area, because of the diversification that we have in the job sectors that we now have that we did not have in 2008, 9, and 10. Guys, I think back in 2008 or 7, we had one Fortune 500 company in the whole state of Arizona. I believe that was the case. Now it is completely different, where our economy is not just dependent on tourism and construction, but dependent on many different sectors throughout the job, industries, right? When it comes to semiconductors and healthcare and tech and so on and so forth. So, the future is bright. The near future is bright. I think the long-term future is very bright in Phoenix. The midterm future could be interesting because I think the overall U.S. economy in the midterm, somewhere of the midterm, is going to have a hiccup. That's my thought. I could be wrong, but again, trees don't grow to the sky, so it has to happen at some point. We do know that. Okay, that was my sidebar. That was my riff. I'm done with that. Let's go back to the data. Okay. All right, so that's that. And then here's the annual sales, guys. Look at this. We are, compared to annual sales in the Phoenix area, we're at 68,000 and counting for 2025. We're going to probably end up around 69 to 70,000. No, more than that, a little over 70,000. And so what does that equal? Well, that equals 70,000 being total in June of 09. So we're looking at levels that we saw in 09 of transaction count, guys. That does not mean by any stretch of imagination there's a lot of transactions happening, because 09 was not a banner year for transaction count. And the last 2 years and this year is not going to be either. So could this curtail and swing up to just 80 or 90,000 transactions for 2026? I think it very well could. Okay, keep that in mind. All right. Now, here's some U.S. stats I want to show you guys, okay, for the U.S. Housing market. Here we go. In October 5th, median sales price in the United States is $389,000, okay? Look, the biggest increase in 6 months. Median asking price, 401. Median mortgage monthly payment, 2508 at a 6.34 rate, down slightly from a week earlier, okay? Pending sales, 79,000 across America, down 1.3%. New listings, you see that? It's up 2.3. Active listings are year-over-year change. Smallest increase since February 2024, up 8%. Month supply of housing on the entire market in America, 4.4 months, okay? And then you have median days on market, 48. It's up plus 7 days, okay? So just some stats to wet your whistle on that, because we do have a government shutdown happening right now as we speak. And according to this article, 17% of Americans are delaying a major purchase like a home or a car due to the government shutdown, but 65% are undeterred, okay? And then it goes on to say that 24% of Americans are delaying or canceling major purchases due to this government shutdown. So it's a little more than just delaying. It's also the canceling part as well, 7%. Okay, but 65% say no impact. But it's interesting because this does affect a lot of people's psyche. It's not just actual dollars of people that are being furloughed or laid off right now that are attached to government jobs. And so we'll see what happens when it comes to a government reopening. I would assume it's going to happen sometime soon, because they usually don't last that long, but you never know with politicians. That is one thing for sure that I've learned. Okay, so let's keep it moving, guys. We now have another article from the Phoenix Business Journal says home sales are getting harder to close because sellers are making a critical mistake. What is that mistake? Well, according to the Phoenix Business Journal and many sources that they have, the number one reason are right there, bing, overpricing. Okay, now this is not rocket science, guys, but they say 77% of homes are overpriced. Okay, 62%, according to HomeLight, say deals are falling through compared to a year ago, and they're sitting longer on the market. So if you want to sell your house in this market, it's pretty easy to get ahead of the class by just simply pricing your home at market value and not reaching for the stars, because that market, for the most part, generally speaking, is past. Okay, so interesting stuff there. Some more interesting things I think that are positive are Scottsdale sees robust development activity amid office space race, guys. So in Scottsdale, Arizona, not only is the housing market doing really well thanks to the luxury home market, but the office space on the commercial leasing side is doing really well, where a lot of people across, or spaces, or I should say cities across America, are not doing so hot with high vacancies on office space. Okay, so Scottsdale is doing great, and this is another article to prove as such. All right. Next, North Phoenix, guys. Again, TSMC rears its head again, because it is such a big development project that there's so much happening in and around it. But this is a 158-acre mountain site just north of TSMC, which is right there. And here's the big site that is up for auction, guys. And so if you have a bunch of money, I think the auction starts at $11.9 million for that piece of land, which is going to be highly coveted over the next 5 to 10 years, no doubt about it, and worth a lot more than $11.9 million, then maybe you want to get in on the action to bid. Okay, but this is a $165 billion plant, and that's happening. If you haven't heard about it, you've been living under a rock in Phoenix. I still love you. It's okay, but this is big time stuff. And what's going to happen amongst development out the 303 loop is going to be incredible. Okay, incredible. All right, now this is interesting, guys. If you know the valley at all, you know Scottsdale. Scottsdale is the higher end area of the Phoenix Metroplex. Well, there is this map right here. This little section right here off the 101 in Pima, okay, Loop 101, right here, that is Mac Innovation Park. Now, there are industrial buildings, very nice ones, by the way, but going up right here, which I cannot believe to this day, somehow the city council allowed this to happen in all this high-end residential right up in here, DC Ranch, Silverleaf nearby. I just can't believe it still has happened, but it did. And these two buildings are being constructed as we speak. And it is zoned to have two more actual buildings come into this big parcel of land. But Rivian, the electrical car manufacturer, is actually looking to put a facility in one of and lease some of the space that is the big industrial buildings. This is interesting because it's going to be like a service center as well as a place people can go buy Rivians, a showcase, a showroom, that sort of thing. But to have it in this area, like a auto body shop, so to speak, is mind-boggling to me. Although they do say, because it's electric, it's gonna be a lot cleaner facility. Think people in polos that are doing the work, not people with the overalls with oil stains all over their overalls and breeches, right? As my grandpa would say, the breeches that they wore. Okay, so I don't know. It's crazy, guys. What are your thoughts on this? I'd love to hear your thoughts on. Do you think this is pushback from DC Ranch? You better believe they're pushing back on this, but Rivian says no big deal, because it's going to actually fit in with exactly how this is zoned as light industrial. So more to see how this plays out with the Mac Industrial Innovation Park, they call it. Not industrial park. That sounds too, blue collar. But we'll see what happens because that is in a high affluent area. And I still can't believe to this day that they got that passed, but they did. And it's there. And hopefully it just brings, hopefully at the end of the day, it's going to be good. And it brings not more traffic, but, less traffic somehow. I don't know if that's possible. And it looks good and everyone is happy, but I don't know if that's going to happen. Nonetheless, it's there. So we have to deal with it. Okay. And then of course our boy, Sam Fox, dude, Sam, you're awesome. Open up another restaurant. And it's in the Old Town Scottsdale area. It's going to be pretty cool. I can't wait to go. I've not been, obviously, but it's inspired by happy hour history. It's called the Society Swan at the Scottsdale Fashion Square. So the Fashion Square gets more swanky with the Society Swan and Sam Fox doing his thing there. It's going to be phenomenal. Okay. Phenomenal. And so I can't wait to see what that's all about. So anyways, we're so lucky to have Sam Fox in the Scottsdale area because his restaurant concepts are awesome. And I know we all benefit from that. So, guys, 30-year fix, where does it stand currently today? It stands here at 6.32%. And that's not bad. That's not bad, especially when we're talking 7%-ish for the many, many months and years prior to that. So, not bad, guys, but hopefully we get down to low sixes by the end of 2025. That is the goal. What do you think, guys? I would love, if you're watching a replay, if you're still watching, I can see y'all watching. Comment, let me know if you have any questions, but we're gonna log off here in a second and let you go about your day. But guys, look for us next Tuesday because the housing market will continue to do cool things one way or another, I guess, right? And so get all your news right here at Everything Phoenix Live right here on YouTube, guys. And until next Tuesday, keep it classy. As always, Phoenix, we are signing off. Take care.